are reallocation decisions at the highest level. The global reserve structure that has defined the post-war world is fragmenting. The capital that once flowed effortlessly into U.S. treasuries is now seeking diversification in gold, commodities, and strategic assets. This is how monetary history rewrites itself, quietly at first, then all at once. For investors and institutions, the implications are enormous. Traditional portfolios built around bonds and equities were designed for a world of falling rates, stable inflation, and global integration. That world is gone. The new environment demands balance across real and financial assets, across currencies, across geographies. It requires understanding that volatility is not risk. It's the expression of change. The real risk is staying positioned for a world that no longer exists. One of the defining features of this transition is that capital is no longer purely chasing returns, it's chasing resilience. In a world of uncertainty, survival becomes the new alpha. The smartest investors aren't asking, how can I maximize short-term gains? They're asking, how can I preserve purchasing power through the storm? That mindset shift from speculation to preservation marks the heart of every great capital reallocation in history. When you look at long-term charts of financial cycles, you'll notice a recurring pattern. Periods of financial excess are always followed by reversion to real value. After the credit boom of the 1920s came the asset revaluation of the 1930s. After the post-war inflation of the 1970s came the disinflationary bond boom of the 1980s. Each rotation corresponded to a change in what society trusted most: paper claims, physical assets, or productive capacity. Now, after 40 years of financialization, the pendulum is swinging back toward the tangible. This capital rotation is not an abstract idea. It is visible in the data. Central banks have been net buyers of gold at record levels for several years. Institutional allocations to commodities and private assets are increasing. Sovereign wealth funds are diversifying away from bonds into infrastructure and resource investments. Even individual investors, once content with index funds, are turning to physical stores of value. The collective behavior reveals a deep intuition. The paper wealth created over decades of monetary expansion is vulnerable. Real value must be reclaimed. The speed of this reallocation will accelerate as confidence in the current system weakens.